All right, buckle up, everybody, because today we are diving into some seriously provocative stuff. We're doing a deep dive into a free chapter from a book. And let me tell you, this book is making some pretty bold claims.
Oh,
It's called The Great Depression 2.0 in Musked America.
wow. Okay.
Right. And the chapter we're looking at, get this, it's called Squirrel Nut Economics, Bitcoin, MSTR, and the Crypto Scam of the Century.
That's
Yeah, I know.
it definitely grabs your attention.
It does. I was intrigued. I was skeptical. I was kind of both.
Yeah.
So I brought in an expert like yourself to help us unpack all of this.
Well, I mean, the title is definitely a little, over the top, maybe, but honestly, the chapter itself, it's a pretty engaging read.
Yeah. Okay.
It really dives into some serious economic theories, and makes some, some pretty startling predictions.
Yeah.
Especially about figures like Elon Musk, Peter Thiel, David Sachs, how they might actually play a role in a potential economic meltdown.
Right. Right. So let's start with this squirrel analogy that the author uses.
Okay.
It's throughout the whole chapter.
Yeah.
They compare the current economic climate, to squirrels hoarding nuts for some impending apocalypse,
Right.
with Bitcoin being like the digital nuts.
Oh, okay.
So as someone who, understands economics, do you think that this is actually a helpful way to explain what's going on with crypto?
Well, I mean, it's definitely a memorable image, and I can kind of see why the author chose it.
Yeah.
It captures that sense of fear and uncertainty that drives some people to just, hoard resources,
Yeah.
whether those resources are, physical goods or digital assets like Bitcoin.
Right.
I think the question is that fear justified? And is Bitcoin actually a safe haven in a crisis? Those are the real questions.
Right, right. Because okay, squirrels, they're pretty good at finding their nuts later.
Yeah.
What happens if your digital nuts, disappear in a market crash? The author seems particularly concerned about Michael Saylor,
Oh, yeah.
the CEO of MicroStrategy,
Uh-huh.
and his, very aggressive Bitcoin investments. They claim that he's taking huge risks with his company, taking out loans, and diluting company stock to buy more Bitcoin. So first of all, what does diluting company stock even mean for, regular investors?
Right.
And why would a CEO even do this?
Okay, so diluting company stock, it essentially means issuing more shares.
Okay.
And when you do that, you can decrease the value of existing shares that are held by, the investors.
Okay.
It's a way for companies to raise capital quickly,
Right.
but it can also be a red flag if it's done too aggressively. You know what I mean?
Yeah.
So in Saylor's case, the author's arguing that he's basically putting his company at risk and, by extension, his investors, by betting so heavily on Bitcoin.
Okay. And it gets even wilder.
Oh.
The author suggests that Saylor's actions are actually part of a bigger plan,
Yeah.
almost like a scheme to manipulate the Bitcoin market and ultimately profit at the expense of everyday investors.
Wow.
They even talk about a potential government-backed strategic Bitcoin reserve,
Yeah.
supposedly orchestrated by venture capitalist David Sachs.
Okay.
Can you break this down for us a little bit? What would a strategic Bitcoin reserve even look like? And
Well-
why would the government be involved?
So the author kind of lays out this scenario where figures like Saylor would drive up the price of Bitcoin, right? Through their investments and public statements and all that.
Yeah.
Then the government, under the influence of someone like David Sachs, would step in and use taxpayer money to buy a large amount of Bitcoin for this, reserve. The idea is this would further inflate the price, allowing those who bought in early, like Saylor, to sell their holdings at a massive profit.
Right.
And they're basically leaving the government holding the bag when the bubble inevitably bursts.
Okay, so that's the alleged crypto scam of the century, as the author calls it.
Right.
I mean, this is a pretty bold claim, right?
It is.
It's almost bordering on, conspiracy theory territory.
Yeah.
I have to admit, I'm both fascinated and a little skeptical.
I hear you.
It all sounds very dramatic. It's almost like something out of a movie.
Yeah, I get that.
So what do you think? Is this a realistic scenario?
Well, it's important to remember we're only looking at one chapter from, a much larger book.
Right.
And the author clearly has, a strong point of view.
Yeah.
They're presenting a very specific interpretation of events, and it's up to us to critically evaluate their claims.
Yeah, you're right. So let's dig a little deeper into these claims. What specific evidence does the author present to support this whole theory? And are there any potential holes in their argument that we should be aware of?
Let's do it. Yeah, so let's take a closer look at that crypto scam of the century theory. I think it's important to really examine the evidence the author's presenting.
Yeah, absolutely. They point to some specific actions taken by Michael Saylor and MicroStrategy, like taking on, a lot of debt to buy Bitcoin. They even link to actual SEC filings to back up their claims. Is that unusual for a company to do?
It's not, unheard of for companies to take on debt to invest.
Right.
But the scale of MicroStrategy's Bitcoin purchases is, well, it's definitely raised some eyebrows,
Yeah.
especially because they're using debt to do it.
Yeah.
The author definitely uses that as evidence to suggest that, well, that Saylor's being reckless, basically, betting on Bitcoin and putting his company at risk.
Okay. They seem to think that this risk-taking is part of something bigger, right? Like a more, I don't know, a more sinister plan.
Right.
Orchestrated by this group of tech billionaires. They even used the word cabal at one point.
Yeah.
Isn't that a bit dramatic?
Yeah, the author's definitely using strong language.
Yeah.
And they do seem to be drawing connections between these figures that, well, maybe aren't so clear-cut. They present this sort of flow chart in the chapter, trying to map out how all these different players are supposedly, working together. It's a bit like a conspiracy theorist's whiteboard, with lines connecting photos and cryptic notes.
Oh, I see. Okay. So let's say, for argument's sake, that these billionaires are, working together to pump up the price of Bitcoin. Why would the government get involved with this strategic Bitcoin reserve? Wouldn't that be incredibly risky for them? And the ultimate victims, according to the author, would be the taxpayers who are left footing the bill when this whole Bitcoin bubble bursts. It's a pretty bleak outlook.
It is a bleak outlook, but it is important to remember this is just one interpretation of events.
Right.
While the author's concerns about the risks of Bitcoin and the potential for market manipulation are valid, it's important to consider other perspectives and potential outcomes as well.
You're right. I mean, not everyone is convinced that Bitcoin is this bubble that's about to burst,
Yeah,
right?
exactly.
Some people genuinely believe in its potential as a, decentralized inflation-proof currency. And there are plenty of investors, both individuals and institutions, who are putting their money into Bitcoin.
Exactly. And while it's true that the value of Bitcoin is volatile, it's also shown incredible growth over the years.
Right.
It's high risk, high reward.
Yeah.
And there are, legitimate arguments to be made on both sides.
So maybe this whole crypto scam of the century is a little bit of an exaggeration.
Yeah, maybe a little.
But the author does raise some valid concerns, right?
Absolutely.
About the potential downsides of Bitcoin.
Yeah.
And the need for, greater regulation in the cryptocurrency market.
Definitely. And I think that's actually a key takeaway from this chapter. Whether or not you agree with the author's, specific predictions, it's just important to be aware of the risks involved in any investment, especially in a market as, volatile and as unpredictable as cryptocurrency.
So even if we don't think that, Elon Musk and his friends are going to crash the economy with Bitcoin,
right,
we should still be cautious and do our research before investing. There's a lot more to unpack here, including what the author thinks about how individuals can protect themselves in this potentially turbulent economic landscape. We'll be back after the break to explore those ideas. Okay, so we're back, and we're wrapping up our deep dive into this free chapter from The Great Depression 2.0 in Musked America.
I mean, it's a wild ride for sure. Even if you don't buy into the full-blown scam theory, it definitely makes you think about risk.
Yeah, absolutely. Even if you take the most extreme parts with a grain of salt, it raises some good questions.
Right.
About financial responsibility and the consequences of too much speculation, whether it's Bitcoin or honestly any other investment.
Exactly. They even tell this funny story, this anecdote about selling a beat up old car.
Oh, yeah.
Yeah, by emphasizing that the vintage charm, and totally downplaying all the mechanical problems.
Oh, I see.
It's funny, but it also kind of makes you think, right?
It does. About how easily people can be swayed by hype and excitement, especially when it comes to something as complex as, cryptocurrency.
Yeah, that's a really good point. The author uses that story to suggest that Bitcoin is kind of being marketed the same way,
Right.
where all the potential downsides, they're just being, ignored. And then you combine that with the fear of missing out.
Yeah.
And it's a recipe for disaster. People are rushing in. They don't even understand the risks.
So what's the big takeaway for everyone listening? What can people do to protect themselves, whether or not they believe this whole, Bitcoin doomsday scenario is going to happen?
Well, the author really pushes for diversification. Don't put all your eggs in one basket, right? Spread your investments around. Don't chase the, quick riches. And most importantly, do your research. Understand what you're actually putting your money into and be prepared that you might lose it.
It's like that old saying, right? If it sounds too good to be true, it probably is.
Exactly. And being skeptical is so important, especially, when it comes to financial advice from people who are going to profit off of your
All
decisions.
right.
It's crucial to be critical. Look for independent sources. Don't just take someone's word for it, especially if there's some big shot or whatever. Verify things. Make your own decisions. Informed ones.
So, I mean, overall, I think this chapter is a bit of a wake-up call.
Right.
Even if you're not buying into this whole secret group of billionaires crashing the economy, it's a good reminder to just be smart with your money. Be careful. Be informed.
Totally agree. And I think it also highlights the need for, more transparency, more accountability in the cryptocurrency market. As more and more people put their money into digital assets, it's crucial to have those clear regulations, safeguards to protect investors and make sure the whole financial system is stable.
Well said.
Yeah.
So, anyone listening who wants to check this chapter out, maybe even the full book when it's released, the author has a link to sign up for a free copy. We'll put that in the show notes.
And remember, this is just one perspective, just one way of looking at things.
Yeah.
It's important to see different sides, form your own conclusion.
Exactly. Stay curious, stay skeptical, and keep learning. That's what a deep dive is all about.
That's it.
Thanks for joining us, everyone. We'll see you next time for another deep dive into something new and fascinating.